couple more seconds and then we'll just dive right in. Last week, of course, we had quite a bullish week for the dollar. You can see we had big momentum, and it's just a question of what's going to happen this week. Are we going to see a continued push up, or are we going to just move sideways and then push up, or are we going to come back down and retrace? So you can see here the momentum in that week was fairly big. Of course, we've made new highs, we've broken these highs here, and we had a small push back towards the end of Friday. So looking at the 4 hour right now, what we can see is we've been consolidating just ever so slightly. We've not really had too much momentum towards the end of Friday. Of course, the market tends to die down, and we have seen big moves, and of course with these big moves coming to the week's close, you'll see people taking their profits and hence the stall in price action. So going down to the 4 hour, it's looking like we're going to retrace just based off the momentum of this bearish candle. We've only retraced probably about 60% of the candle, and then we've come back down and then we've closed for Friday. So we want to see where we're going to open and where could we potentially go. Now, it wouldn't be too strange to retrace back down into an area. Maybe, for example, you can see a little demand right here. If I was to take this 1 hour demand zone, that could cause us problems right on the edge of this support, but could be support is broken, and hopefully we'll come back down and hold, because then we could get a good indication of where the rest of the pairs on the watch list are going to be going. So looking at the lower time frames, it does look like we might retrace. On the higher time frames, it's definitely looking bullish, very bullish. So we've came back down all the way to the base of this little area of support here. Failed to retrace this candle, and then we're coming back down, so we're going to wait and see what the market does when it opens. So we're going to keep an eye on this zone here, because it's obviously a nice area of demand that we've seen price action rocket from. Of course, we've got this area of demand that price action may well come back down into. You've got areas of course, broken resistance that could potentially now become support. So we really need to try and understand where price action could potentially retrace to, if retracing is what the market wants to do this week. If not, then we're just going to have to monitor what happens here on out, and then if we do push up higher, we're going to have to take that into consideration. But it does look a little bit overextended. It does look like that we will have a pullback this week, but again, we're just going to have to wait and see what happens when the market opens. So if we were to take, just for the sake of going through these pairs, that the dollar will retrace and it's going to be bearish for the majority of the week, we're going to go in, especially with Euro USD, GBP USD, and NZD USD, of course USD JPY. We're going to go in with that mindset and apply the correlation to the setups that we're looking at. So let's start off from the top and we'll work our way down. Let's go to the daily to get a better view. Now, this was just a nice area of support that, of course, has been quite significant. Daily candles respected it very well. Of course, a lot of data in a daily candle. You see here, really well respected area. We could maybe even push that all the way down here, but I didn't want to make that too big of an area, but it does fit in well with these bounces of support. So we're coming back down into that now. It's a big area, so really all we're doing is just monitoring to see what happens in this area. Okay, then of course we could go down to the lower time frames to see where could price action head next. Now if we go to the weekly, you see here that we've had from the 16th of March 2020 all the way up to the 15th of February this year, we have had big moves. 15th of February last year, we have had big moves. We've been moving bullishly, of course, not all the time, but the overall trend has been bullish, and then that broke around about the 22nd of February and we started moving back bearish. Now we failed to break these highs, we're coming back down to a real nice area of support. Okay, broken, now it's coming back down to retest many weeks later. So we're going to see what happens when price action approaches this zone, which it has, and we are seeing a little bit of a stall. Of course, towards the end of Friday there we did start pushing down a little bit lower, but again, I'm going to have to really understand what's going to be happening in this area before I'm going to be looking to take any positions, before we're looking to take any buy positions. But this was just on the watch list because I feel like it's at an interesting area of the chart, an area of the chart that on the higher time frames is shown a lot of respect for. So it's definitely one that we're going to be keeping on the watch list, but for now I think it needs a lot more development. 𝗙𝗹𝗶𝗋. This was one that makes a lot more sense to me. Okay, this is, out of these two I would definitely be choosing 𝗙𝗹𝗶𝗋, and it would be for buy positions. Again, it's similar, but it's just a cleaner setup. You can see here we had that nice move, we've had that nice move here. So let's say, for example, I mean, if we were to take, like we've taken to the bottom of these lows, to the tops of these highs here, and you can see that we had a nice bounce off the 0.618 Fibonacci retracement. We've actually since broken below that, and now we've hit this nice area of demand. Okay, we've got a nice area of 4-hour demand, and if you go down to the lower time frames, you could actually see that we're creating new structures. So I would potentially be looking to get into a buy position on this pair. Now, where would be a safe place to put your targets? Now, potentially if we were to just ignore that this is here, this area here where we've seen that large drop might cause us some problems. So if I was to pick a target, I might pick 81,600. So if the market was still active right now, it would look something like this. Okay, so you'd be getting a nice risk to reward, but again, we're going to have to wait and see if the market gaps up, gaps down, where it settles, and then if it does continue that bullish structure, or it could completely change its tone. So that would be something that I'd be looking at. Looking at buy positions potentially on this pair. But only if the market presents good opportunities to do so when the market opens. So we're going to keep an eye on 𝗙𝗹𝗶𝗋, and out of the two I would definitely be choosing 𝗙𝗹𝗶𝗋 just because the setup's a lot cleaner and things seem to be looking a lot neater in terms of getting in, risk to reward, and just the overall price action. So still keeping Aussie CAD on the watch list, but I'd choose 𝗙𝗹𝗶𝗋 as a focus if you were going to choose an Aussie pair, Euro GBP. Again, similar to Aussie CAD, it's just coming into an area that, of course, I'm very interested in, considering that we had this demand cause such a big push away, an incredibly big push away. So we want to be making sure that when price action comes back into these zones that we are aware of it, and we're monitoring exactly what that reaction is. Now you can see we're going to be looking at the lower time frames of 1 hour, maybe even the 4 hour. And just see if we could break this area of support. If we can't break this area of support, then I'd be happy to watch it for a little bit more, and then if we do get that entry signal, we might take a long position. Now, of course, it's still looking very bearish. We did break these new highs with this price action here, broken these highs, so we did create new bullish structure, but it was short-lived. We came back down, and it looks like we're going to form a double bottom, if not crash right through. So again, it's one of those ones that we're going to need to wait on the market opening and see exactly what's going to happen. Is it going to have the same tone, or are we going to start crashing through the floor? So it's definitely a big area. You can see multiple other times previously, 2017, 2016, that we've had these big pushes away, and we just seem to continue to have these big pushes away. So we definitely can't ignore it, but although history does repeat itself, these things can only happen for so long. I don't see your GBP going lower right now, but it potentially could happen, and then it would be a good sign if we do get some bullish price action, because we have a lot of space to the upside to make back this bearish move. So I would be definitely keeping an eye on this pair, seeing what the reaction's like in this zone, and if we could get some new bullish structure. Be careful about your entries, because we might, still keep coming back down and get squeezed into this corner. But if you do manage to get an entry that you're comfortable with, it might be worthwhile looking at buy positions. But again, we're going to need some convincing bullish price action. But I do think the bears are going to run out of steam here. So Euro USD. Again, this is what we're looking at. We're looking at ascending wedge, ascending triangle. We've broken above, hit this area of, hit this area of supply, and then we've tanked down ever since. But now we're currently at an area that's quite hard to ignore. You can see we've had big pushes away. It's been used as resistance many times. So, and again, another area of demand that had significant pushes away. So we're going to need to wait and see. The overall picture, if you go out to the weekly, is we are coming to the edge of this trend. We're failing to break these highs though. So instead of creating new higher high, higher low, higher high, we've actually not. We've failed to break these highs. So this could potentially break here, and then that might actually open up an area of the market for short positions. But it's definitely an interesting point. This is a steep decline, so we could potentially break up, but of course there's that opportunity and possibility that we're going to break below this. But it's a significantly big trend line, but just with the way price action's been rejected here, it's confirming that the buyers are running out of steam here. And you see this could potentially be a head and shoulders. You would have your neckline, and then we have broken below. So again, I'll be watching to see what happens in this area of the market, and then from there on out, we're going to be monitoring the dollar index to make sure that whatever we are planning on this trade is in line with what is going on in the dollar index. So GBP Swiss. Again, we're looking for short positions on this right now. Just with the rejection that you see here, a nice area of supply. Okay, if we could be even more specific, I would take maybe this zone here as a supply zone. We pushed just above it, took all that liquidity, and now it looks like we're going to tank down. So hopefully, then when the market opens, we can maybe get something like price action coming back up into here, and then we would be looking to take price action down. But again, this would be a case of monitoring the lower time frames. You can see this is where we would have entered. This would have been absolutely perfect. But that being said, you would want a better entry signal than this. But this is ideally where you would have wanted to enter. Maybe stop loss just behind these highs, but hopefully we can get something similar when the market opens. But that's what we're looking at for GBP Swiss. Short positions for now, back down to, I'd probably say, maybe even just down to here. So let's call it 1.23400, 1.23400. So if I was to just put a marker on that now, and then this is what roughly we'd be looking at if the market was to be live right now, or if we got a similar opportunity where we had price action come back up into this zone, one last final touch before coming down. This is what we would be looking at. Hopefully if we did get that opportunity, we'd create a new lower low and then a lower high and then continue lower. So we would get behind this lower high, or stop loss behind this lower high, and then hopefully get the entry signal to get in the market. So that's what we'll be looking for on GBP Swiss. But again, we're just going to be making sure that we're paying attention to what's happening when the market opens and the overall mood, and not to mention making sure we're on top of the fundamentals and not being in any trades when there's high impact news going on. GBP USD, you can see what we're looking for here, buy positions. So why are we looking for buy positions? You can see here we have a nice area of support that looks like it's been rejected. Now we're not discrediting the fact that this is quite a strong piece of momentum last week. So we've pushed down pretty hard, but now we're stalling at this area here in the market. So if we go down to 4 hour, you'll be able to see this is actually an area of demand, demand, sorry. So we've got an area of demand here that price action is stalling from, and then if you go to the lower time frames, right in line with the 0.618 Fibonacci as well on the 4 hour from the bottom of these lows to the tops of these highs. We're hitting that 0.618 Fibonacci retracement. You know, it's the golden ratio, so it is definitely another confluence that we could add to potential getting in long positions on this trade. Then if you go down to lower time frames, maybe even the half an hour, you'd be looking for your entry signals. Now we do need some convincing bullish structure before we would even consider taking this trade, but we'd definitely be looking for long positions in correlation with the short-term pullback of the US dollar. Now of course that might not happen, and this might push down lower and the dollar might push up higher, but this is the current outlook that we are having for this week. But again, whatever the market decides to give us, we'll be able to react to, because we've got everything that we need planned on the chart. You see here a nice area of, let's see, yep, that's right, nice area of demand here. So we've got price action coming back down in there. We're coming back down heavy though, but we might actually just create an inverted double bottom and push up higher from here. But I mean, we do have a small area of resistance here we need to be aware of, but if we were to get bullish momentum, this would be the area I would be targeting up to here. But again, we need that bullish price action, and it needs to be convincing, and it needs to be on the lower time frames, because we don't want to be caught out and missing out on maximizing your risk to reward. So if you wanted to be a bit more reserved, you could take it up to probably 0.61600, but again you would need, of course, bullish structure here. But in terms of just where we're at on the higher time frames, we're of course bearish, but we're coming back down at an incredibly interesting area of the market. A bit like a lot of these pairs that we're looking at, they're coming back down into incredible areas of the market that have had huge pushes away. So you don't want to be missing out on any of these moves if they were to take place over the next couple of weeks, if that was to even happen. So again, not one I'm too excited to act on just now, but definitely one I'm going to keep on the watch list. NZD, USD, again another nice pair that's been moving down bearishly, pretty heavy. So, but again, we're coming back down in a nice area of the market. You can see here we've had significant pushes away, again on the daily time frame. So these candles have significant amounts of data to suggest that we might get something similar, but we have come back down and strong, so I wouldn't be jumping in anything just yet, bearing in mind that we do have Euro USD and GBP USD that we have on the watch list anyway, so we can't take them all, we won't take them all, so it'll be a case of which one looks the best. So for me, this one isn't looking as good, but it's definitely got potential, and we're coming back down in an area of the market that, of course, can't be ignored. So if we were to take price action back up to the top here, we have just above the 0.5 Fibonacci retracement, this demand zone. So we're going to see, could we get another leg up, basically. So, but again, in terms of the other trades that we have on the table, there are a couple that are looking a little bit better. So again, it's just a case of which one looks best. USD/JPY. Yeah, we're looking for a bearish move on this. We've seen price action come back up into this. We thought we were going to stop at this supply, we didn't. We pushed up a little bit higher, and since we've come back down. So going to the lower time frames, you see if the market was still open, this would be what we would be looking at. So again, hopefully price action could come back up in line with the US dollar being a little bit weak, and then pushing down further, we would just take price action down to 114,700. But again, we will pick the best out of USD/JPY. We might take two, but USD/JPY, NZD/USD, GBP/USD, EUR/USD. So, and of course, it always comes down to whatever one's offering us the best risk to reward. So finally, gold. We are bullish on gold right now. Again, coming back down, incredible area of the market. You see this bearish trend line that we've had for quite some time, since the 7th of August 2020. We're coming back down now in an area of demand, so we really want to be paying attention. But again, the same old story, we've tanked into this pretty hard, but we've had a great rejection. You know, when a trend line's been broken, it comes back down and acts as support like this right now. Not too much of a hammer candle, but it's definitely a good rejection away, and you can see we had some strong bullish momentum towards Friday's close around this area. So we're going to be watching that, and we're going to be making sure that if there's an opportunity to get in a buy position and it meets all our rules, then we're going to get in and make sure it's a great risk to reward. But it's definitely an interesting setup. We have failed to break these highs, so again, you must be careful and not make your take profits too far away. We are still showing bearish signs, but we have broken out of this bearish trend, and we're coming back down now in a real interesting area of support in the form of demand and the support of the broken bearish trend line. So that's been the weekly watch list so far for this week. Not too many pairs on the watch list, but definitely a good few setups in there. Just be careful and make sure that you're picking the best ones. If you've got free on US dollar based pairs, make sure that you're picking the best setup, and if you've got a couple of good ones, you can then of course take more if you're a bit more experienced. But don't be trying to trade them all, because you'll eventually just lose all your money. So if you have any questions about today's weekly watch list, post them in the comments below, reach out to us direct, and we will get back to you as soon as possible. So we hope everyone has a profitable trading week, and we'll see you in the next one.